We're super excited about launching options on our Bitcoin futures in Q1 of 2020. It's been great to see the customer reaction. We've designed the product in response to a clearly articulated customer need. We launched Bitcoin futures back in 2017, and I think that really gives us an advantage for introducing options at this point. Our futures contract has continued to grow since 2017. We're doing about 7,000 Bitcoin futures a day, which is about 35,000 Bitcoin equivalent. Half of that volume is coming from outside of the US, both as a function of geography as well as time of day. So when we look at the robustness of the underlying futures contract at CME Group, I think that's a key advantage that we have, where not only can the market be the underlying source for the hedging of options, but also the robustness and the price transparency and the price discovery that happens in the future will lend credibility to the options contract right out of the gate. So we're very excited about it. And then I think when you couple the success of the futures with the global distribution that CME has through our electronic trading platform Globex and the international participation that we have in Bitcoin, it's setting up for an exciting launch in Q1. So back in May, CME Group launched the McCourt E-Mini futures contracts on the major 4 indices that we also have the classic E-Minis on, namely the S&P 500, the NASDAQ 100, the Dow Jones, and the Russell 2000. They've been insanely popular and have exceeded our wildest expectations since launching back in May, and it actually has become the most popular and successful product launch at CME Group in its nearly 180-year history. So it's been quite exciting to watch. I think one of the reasons why it's so popular is because when we look at the equity market specifically in the US, as a function of just the price of the index, the kind of pervasive one-way bull market we've been in the last decade plus, the index has just gotten more valuable in terms of price, which has made the contract value of the E-mini grow and almost triple in value since first being launched in the mid and late 1990s. So that, as a result, has effectively kind of forced some people out of the market. It's priced some people out of the market. So creating a right-sized contract at 1/10 the size has really brought back in new participants to the marketplace. It's brought back in participants. It's brought in new participants, as well as those active E-mini traders already. It's now allowing them to be more precise at 1/10 the size in terms of deploying their trading strategies and meeting their risk management needs. So I think the real successful factor for us is we delivered a product that customers really wanted and needed in the marketplace on 4 global benchmark products that are already fantastic sources of liquidity at CME Group. So some of the trends we're seeing in customers are that in general, they're continuing to turn to CME Group to manage their global equity index exposure. We see it with the micros in terms of their early adoption. And, while that product was designed for the active individual trader, we're also seeing it be embraced by institutional and buy-side customers because everyone can benefit from the precision that smaller 1/10 the size contract has. ESG has certainly been a hot topic in the index space the last few years. It's something that customers have wanted. Customers are getting more attuned to the fact they want to deploy specific ESG investment strategies. They want to invest in ways that align with either their personal or perhaps their corporate values. So we've seen this upwelling of interest and demand for ESG-related products. What's exciting at this point is that on November 18th, we're going to launch the E-mini S&P 500 ESG Index Future at CME Group, which will basically overlay an ESG approach to the global benchmark S&P 500. So there's going to be about 316 stocks in the index, and what that does is the S&P 500 has effectively excluded those companies that fail from an ESG perspective, whether they may be, for example, tobacco companies or they may have business dealings related to controversial weapons. But it also goes one step further, and by each GICS industry classification within the index, they rank all of the component stocks and they remove the bottom quartile by industry based on their ESG score. So with that, we got about 316 stocks plus or minus, and therefore it's the global benchmark that everyone is used to in the S&P 500, but it satisfies and complies with the ESG investment approach. So I think when you combine something as exciting as ESG with the liquidity of the S&P 500, that's something that we've got a very strong reaction from customers and looking very much forward to the launch on November 18th.
This has been a production from John Lothian News.